It is a good idea to start some new, better financial habits as we enter a new year, or to change old ones, as the case may be. Small adjustments here and there to finances may have a big effect on our purse. Now, not everyone understands and even knows the details of a trial balance or other accounting language register. We all need to have the basic knowledge, or even just track the inflow and outflow, and of course have a definitive balance in terms of personal finance in order to achieve some measure of freedom and growth. And to enlighten us and open our eyes to these things, we have our guest this morning on the show, Victor Aluyi. He's the Senior Vice President and Head Investment Sankore Global Investments, Lagos, Nigeria. Thank you so much, Victor. Happy New Year to you.
Happy New Year.
So it's a new year, we all know that, and it's always nice to put our best foot forward. So in terms of making better investment decisions and starting plans in terms of our finances, how do you think people can go about that, most especially after the holiday spendings?
Well, I think a very critical part of investment that is oftentimes neglected, really, because a lot of people, make their permutations about where they could get the best returns, how they can get into it in, whatever assets they are looking to get into, whether they are looking to get into equities, what stocks you think will give you the best returns, or what stocks you think are positioned to give you the best returns, whether they are looking at fixed income. They obviously have, assumptions as to how they want to play, where they can get the best yields possible. And also even looking at a global perspective, people have all kinds of views around, where they could get the best returns possible. But I think one area that is often neglected is risk management. Risk management, for me, is at the core of generating sustainable investment returns. Because having looked at the markets that you want to play in, having looked at the assets that you think would do well for you, having looked at the securities that you think will give you the desired returns, it is important for you to dimension what could go wrong. Now, because there really isn't anything that is guaranteed, so things could go wrong. So you need to ensure that you have a framework within your investment thesis or your investment portfolio that ensures that if things go wrong, it will not be all totally bad for you. So I think that this year it is important to have that, that risk management hat on, to ensure that you have a very robust and holistic approach to investment that will ensure that you are able to attain your investment goals in 2023.
All right, so having that risk management consciousness will also guide you in your spendings, because we know that some people tend to spend more and in that process incur debt. Now, in terms of debt payments, how does it affect people's finances, most especially what they have left, and of course, when they're hoping to secure loans, maybe to meet up some other financial obligations that they may have outlined for the year?
I mean, if you have a debt situation on your hands, you clearly have to continue to fulfill those obligations. It certainly impairs, your ability to then be able to save, and by extension, your ability to then invest. But I think the good thing is that once you're able to service that and dig your way out of it, it essentially establishes a really good credit score for you, particularly in environments where credit is a huge thing. Unlike our own environment here, where credit isn't necessarily great, So in an environment where credit is a huge thing, it's important that you're able to navigate your way to ensure that you service those debts. What it typically does in our own environment is that it significantly limits your ability to save and ensures that you really have nothing to invest. But I think that it is important to get away from that negative situation, and then you can then forge a way as to how you want to then start to save and then also be able to invest. At the end of the day, it really depends on the kind of income that you get, such that even within that income that you have, you're still able to maybe service your debt and probably be able to put something away. But albeit, it typically affects what you're able to put away to save and then ultimately invest.
It's been said that mobile money seems to have openings that could aid debt payment or debt management, as the case may be, and even other sundry kind of payments. Are people actually using this method enough in banks? Or let's talk about the financial institutions now. Are they using it as much? I'd like you to walk us through the process.
I mean, it's essentially part of the Apex Bank's agenda to create greater financial inclusion. It doesn't have any bearing on debt, really. At the end of the day, it's essentially a platform that facilitates the movement of money, whether it's been, used to buy stuff, whether it's being used to pay debts. Really, at this point, doesn't matter. At the end of the day, it's just to ensure that monies are able to move, seamlessly from one place to another. So again, I think that the drive of the Apex Bank over the last decade at creating greater financial inclusion has been quite commendable. We've had all kinds of initiatives to ensure that you have more people within the banking net or within the financial system net. And it is typically net positive for the country. You certainly be able to create, deeper and stronger capital formation that way. And it will certainly help, with financing, not just on the national level, on the macro level, but it will also certainly help with financing for businesses and individuals as well.
All right, Victor, let's also talk about budgeting, because that's another instrument for finance management. Now, there is the 50-30-20 budgetary plan. How does that affect, people having to expend their savings or expend what comes to them in terms of their income? And are there other ways other plans whereby they can employ in terms of segregating and highlighting how much goes into what and in what aspect, so that you can have, or most especially our audience, can have a better financial judgment?
I mean, at the end of the day, budgeting really, the principles that apply to an entity, that apply to a nation, would also apply to an individual. You need to be very clear where you're at. Also be very clear how much you earn. Be clear what your expenses are. Really, at the end of the day, budgeting is essentially a tool that helps you attain your financial goals. So what are the goals that you're trying to attain? What goals are you trying to achieve? It is that goal that would then essentially determine what kind or sort of budgeting arrangements you would use and what sort of budgeting arrangement will suit you. It isn't a one-size-fits-all type arrangement. There are some people, based on their goals and also based on what they earn, are able to save more, while for others, they are able to save less. So it really depends. It obviously starts with what goals are you trying to attain for this year? What kind of money do you need to put aside on a monthly or a weekly basis for you to be able to attain that? And that is essentially what would then determine how you would budget, because you would then need to line up your spending habits and all of that, in that direction as well. So there isn't any one size fits all in this type of situation. It depends on the peculiarity of one's financial situation and what goal one is essentially trying to attain.
So if you're going to give any sort of financial advice as people step into the year 2023, which would you consider a long-term or a short-term kind of savings? Because, of course, we know there are different projections for the year, and some people are speculating that 2023 might not be as favorable for some people as 2022 might have been for some and not for others. So looking at 2023, would you advocate for long-term kind of savings or short-term to meet some specific needs at some specific times?
Again, it depends on the peculiarity of the individual. If you have specific needs that you need to meet in the short term, you have to meet them. If you're trying to save towards long-term goals, then of course a long-term saving plan would work well for you. In any case, it is important that your goals are clear to you. What financial goals you are trying to attain, they are clear to you. Certain goals are ones that are attained within a year. Certain goals are multi-year goals. So it depends on the peculiarity of your situation. There isn't a one-size-fits-all. It's important that you have your goals clearly set out. It's also extremely important that you're very clear where you're at in terms of what your financial situation is. And that would basically, help you through all of the tools that are available, meet your financial goals, whether they are ones that you would meet in the year or the ones that you meet over a multiple year period. Also critical to this, like I highlighted earlier, is risk management. You need to be aware of the risks that are out there that could jeopardize your plans, and then create a structure within the framework that you have to ensure that if those risks go ahead to crystallize, it's not all bad for you. So what I would say is this year you want to have a proper risk management hat on to ensure that you're able to really attain your goals.
Well, Victor, in as much as one would still need to consider, what comes into the person's pocket in terms of income and multiple streams of income, of course, it's always also good to have a bit of projection. Now, we understand that there are issues with companies trying to get out of the COVID-19 pandemic. There is still inflation, there is scarcity, hike in the prices of fuel, food, and all that. So there's a bit of financial stifling in the economy, not only in Nigeria, but in Africa, as it were. Now, would you say that it's important to have different kind of financial projects or financial purse to meet your projects? Of course, whether or not you're hoping to have 100% performance in what you are able to churn out at the end of the year, it will depend on what you have and you're able to expend. So would you advise that one should have, multiple purses or incomes so as to be able to meet some certain projects?
Multiple incomes is highly desirable at the end of the day. Whether you are then able to achieve it is another question entirely. If as a country, as a business, as an individual, you're able to earn money from different sources, that's great. That's fantastic. It is highly desirable. The true question really is whether you are able to do that. And again, it depends on, how things flow from a macro perspective down to the individual. So, like I said, a lot of things will come down to how you are able to perceive of what risk is out there and how you're able to dimension it to create a structure that kind of protects you from the risk crystallizing. Remember, it's a case where the expectation, for instance, is that, okay, global growth is going to slow down in 2023. How is it going to impact your own industry? How is it going to impact your own sector? How is it going to impact the sort of investments that you're looking at? It is important that you have a really clear idea of that, and then you're able to create a proper framework or structure that protects you from the vagaries or the adverse impacts of what we're probably going to see in 2023. But having multiple streams of income is highly desirable. Whether or not one is able to attain that really remains to be seen.
All right, so finally, let's look at the issue of retirement, because that's another common way of having funds being saved for uncertainties or later in life. Now, what are the areas or parameters that people should consider when they're about choosing a pension fund administrator? What are those lookouts that would help them choose a better administrator?
Well, I mean, at the end of the day, you certainly would want to look at the track record of the administrator. You also want to look at service. Those are key things that you certainly want to look at before you go ahead and make that choice. I think that the framework that supports the entire pension industry is really strong and robust, continues to evolve. And that has created a situation where we've been able to increase the assets under management within the pension industry, currently sitting at about 14 trillion today, which is really, really significant. So I think it's important to consider the track record of the PFA and also the sort of service that you would get from them as well. So those are things that I think are critical for anyone to consider before making a choice of an RSA account that they want to go ahead and open.
All right, thank you so much, Victor Aluyi, for joining us. We hope that even as people have listened to you, they'll be able to take a cue from this financial advice that you've given and have a better saving plan for themselves. Thank you so much, Victor. All right, now financial goals are almost always part of setting New Year's resolutions, but succeeding requires focusing on the right things and then making regular, ideally weekly, monthly, or even yearly progress towards them. Now, increasing your streams of income could be a great start, just as Victor has said, before you start thinking about setting up savings and even paying your debts or thinking of how to have a robust retirement portfolio for yourself. So you might want to start considering these areas if you're hoping to have better quality, improved financial portfolio for yourself in the year 2023.